Good evening to all of you guys. Welcome to the price action analysis video of the 9th of May 2022. And this is one of the reasons why I started this YouTube channel. What has happened today is exactly what I used to get trapped in when I was a new trader. I used to suffer a lot from FOMO, and I used to be very impatient getting into trades and wanting to make some quick profits, and it's pretty natural, but that's natural of new traders, and exactly why I wanted to start this YouTube channel and wanted to ensure that I would educate new traders and retail traders, and that was my intention behind starting this channel. And exactly something like I used to get trapped in has happened today. Now what has happened today? Let's start with Nifty first. So Nifty gapped down today, and after the gap down you saw that it opened with this red candle here. Now this red candle suggests that there are a lot of sellers in it, right? So what I used to do initially in my early days was that I used to jump into this red candle here, and I used to think that okay, now this is going to be a hugely trending day and it's going to start falling from here. So the market is going to start falling from here is what I used to think. And I used to think that I don't want to miss out from this opportunity of making big sums of money, and I would jump into that trade, right? Because you can see that it has clearly broken S1, S2 and S3 also. How many supports has it broken? See, this is S1, now this is S2, and it has clearly broken S3 in the very first candle itself. So price looks really bearish, right? And apart from that also, obviously you know that we are in a bear grip right now. We're in a firm bear grip right now because we have been seeing days gap down quite consistently, and we've been seeing gaps being left. And so the general sentiment would be that it would be a trending day to the downside, so something like this, right? And who would not want to be a part of that rally? So having said that, the red candle, the first red candle, indicates that there are a lot of strong sellers in it, and it's a very natural thing to want to go and short here. And where would you keep your SLs in certain circumstances like these? Given the fact that you've already seen that it has broken S3, you would think that your SL might be safe somewhere here, your SL might be safe somewhere here, and the safest place to keep your SL would be here. And now when I have learned price action, and now that I have experience in this market for so many years, I do not tend to suffer from all those retail emotions. I call them retail emotions, especially the emotion of FOMO. So I don't really suffer from those emotions wherein you are thinking as if you are an inexperienced trader. So what happened here? After the first candle, it fell a bit, and then somehow it took support here, right? And then it made this doji, and then it made this strong green candle. It looks like something called a morning star pattern. I'll just write it down for you guys here so that you can see this. It's called a morning star pattern. So it's not exactly textbook morning star, but it looks perfectly similar to a morning star. The morning star requires a strong downward trend, initial downward trend, but this happened very early in the day, but nonetheless it still looks like a morning star pattern, right? And then the market reversed. Now what happened here? This was the high of the opening candle, and then after this price had pushed down from here. This big candle is a trap candle, because big players know that when retailers see this candle, they'll jump into it. And when they jump into that trap candle, the price, when it reverses, is going to take all their SLs at all these levels. And if price continues to go out of the day's high, it is going to lead to a blasting move to the upside. And you also knew that, or if you had seen it, then you would have known, or if you do use it, then you would have known that the CPR here was a single line. This was the CPR. So this was a single line CPR. It was so tight, it was so narrow. And so whenever there's a single line CPR, it leads to a trending day. That is most often. It doesn't always happen, but it most often leads to a trending day. And so what happened here? The price came down, it reversed, it started going up, and as it started going up, it started taking all these SLs at these levels. And so once the support was given to price here, all big players had to do was to close their short positions in this candle and start covering their positions. And so all retail stop losses were blown here, and then you could see how price spent some time here, quite a bit of time here, going in a sideways trend. So there was an accumulation phase there, and then a final push was given in this particular candle here, and then you could see how the movement was to the upside. Non-stop green candles, right? Non-stop lower highs. And this is exactly what I intend to teach all of you, that you should wait for a confirmation there. Don't just jump into the first candle because you see that there is a big red candle. Wait for it, because it is the central pivot range is very narrow, so it does suggest that the price might rally to the downside. But most often in my career, I have seen the price reverse from such circumstances, from such positions. And then you could see how the price was pushed up in this position, and once the SLs here were fired, then there was a big move. You could see the green candle there. That is the indicative candle, and it was actually this one, the 11:30 a.m. candle, that had closed outside the high of the first candle itself. But this was a better candle close above it. And where could you have traded? You see, here you should see where bears or bulls are trapped. Now where are bears trapped here? Well, what is a bear trap? Now here is a bear trap. What is it? That here the price has been pushed down, and then all retail traders are trapped in it, and then they are forced to cover their positions because the positions are going against them. So this is the candle that is your entry candle, and whenever you get a roundabout a 50% pullback, then you can go short on that particular level. So that is one of your best strategies to use. Whenever you see that you want to take a long position, wait for a 50% pullback. It might not happen every time. It might happen that price might just keep going up and up and up like this. So it might not happen every time, but I'm a big fan of pullbacks. So I always know that there will be some profit booking after the breakout, and partial pullback will be there, and then the price will continue on its journey upwards. And where would you take your profit? Now the best place to take your profit would be either the PDL, or we did have a resistance here. You can see this line that we had marked, the level being 16236.80. that was one level where you could have taken your profit also. You could see that there was some bit of resistance given at that level, but that level was really not much of important, does not carry much of importance today in such cases when you see a short covering rally, because short covering rallies can be so strong that most levels will be broken at that level. And you could see that price then, after this sort of fight at the PDL, it broke the PDL with this candle also. So this green candle broke out of the PDL. Okay, so this was where all the bears were trapped. So this is where the bears were trapped, and you could make use of this sort of price action. So always ensure that you learn how to profit from trapped traders. So this was one of the bear traps. Now where do you see that there would be a bull trap now? So what happened later here? After the 12:25 p.m. candle, let's study what happened. Let's study the price action. Now at the 12:25 p.m. candle, you could see this wick on the high, and the next candle could not close above the wick. You could see that this was the new high. So now let us mark the newer high here. And it took nearly 1, 2 and 3 candles to actually break out of that range, and the fourth candle did break out of that range. And then you could see that the central pivot was very close, but the central pivot was a single line. Nonetheless, it was a central pivot, right? So what happened here now? How is another way you can make a profit out of trapped traders? Now when you see such a huge green candle break into the previous day's range, because this is a day low, right? This is the previous day's low. You can see here, I'll just show you. See, this was the previous day's low. All right, and you could see that the level also happened to be the S1 pivot. So the day low and the S1 pivot were very close today. They were a single line today, and so once the PDL and the S1 were broken by this particular candle, there would be a movement towards the CPR, right? And the CPR is very narrow today. So most often you should wait for the point where retailers would get trapped. Now again in this candle, you could see that it being a huge candle, you know that from the previous day, there were sellers there, right? In the previous day, and the sellers who had pushed this price from this close to this open right down here, they were also present in that, and there they had to exit their positions when the price closed into the previous day's range, right? So this candle was a good candle to go long on, but the central pivot was again very close. So in such circumstances, what you should do is you should not take a trade here. Don't go in here, because the price has been rallying right from this point, right? So most often this will be a failed breakout. So forget about it. Don't take that failed breakout. Don't take that breakout. It does not matter. Let the price run away. It doesn't matter. Don't run behind price. If you missed going long here, forget it. Don't go long here. And what was your next opportunity? The next opportunity was when price actually reversed back and took the low of this particular candle. Now why was this the opportunity? The box that I am marking here is again an SL rich zone. This particular box is again an SL rich zone. Why is it an SL rich zone? Because all those traders who have gone long looking at this candle, all of them have their SLs in this particular position here. So that zone is an SL rich zone. And the moment price retraces back into that zone, you could see that it retraced with these three back-to-back red candles, and then you could see a pump was given here, a push by the 1300 hours, that is the 1 p.m. candle, and then the 1 p.m. candle again it failed, and the price actually came back, and then the price fell from there. So there was a sharp crash there. Why was that crash? Because all the bulls that went long were trapped here. So initially bears were trapped here, and now all the bulls were trapped here. And so here you should know how to profit from these trades. Now once the price retraces and breaks the low of this green candle, you should short at this candle. You should keep that SL up here, give it some room and keep that SL. Okay, you should always give the market some room to play with. And then you could see how it reversed back. Now where should ideally you have been your profit booking? It should have been here at this level. Okay, why that level? That level because you could see that price had actually taken, this was the breakout line, right? The previous breakout line was at this point. You could see the 50%, we just talked about it, 50% breakout line, and this is where the price had given the initial push from. So it had reversed from here, so this was the swing low, and so the most natural position to take profit was this particular level. So this was not exactly a 1:2 trade, but it was definitely more than a 1:1 trade. So it's probably around 1:1.3 to 1:1.5. So that was one good trade to take there also. And so this is the way you should think. You should think where the market is going, what the price action is trying to tell you, where the market might reverse from, where the market might go ahead from, where you might see a legitimate breakout, where you are seeing a false breakout. And let me tell you that most often breakouts fail. So given my experience in trading, learn from it that most often breakouts fail. So if you were to side yourself by reversals, you would definitely be much safer in the markets, because most often breakouts fail. And even the fact that breakouts can have fake breakouts is another trap you will not fall into. So if here, for instance, once you saw that the first candle high was taken out here at this level, had you not gone long here but still waited for price to actually reverse back into the day's range, here shorting would also have been a good idea, because then you would have taken your profit right back at the day's low. So this would have also been a good idea to go short at, that good position to go short at. And here had you seen a red candle like this, it would have been a good idea. So you should always think where you can benefit from trap traders. So instead of participating in breakouts, and instead of suffering from FOMO that your breakouts are the price is going to run away and you should run behind the price, forget about it. It doesn't matter. So you see this breakout here, it kind of worked, but then you could see this breakout here, this one, that did not work and the price reversed. So if you were to side yourself by the reversal patterns in the market more than breakouts, reversals more than breakouts, then you would tend to make a better trading journey, in my opinion, in my honest opinion. And so breakouts can have false breakouts also, so they can be false also. Okay, so but reversals, you've never heard the term false reversal, right? And so reversals, yes, even if you see this and from here also price might reverse and then it would keep going upwards, that can also happen, but most of the times that happens in terms of breakouts. So it happens, there are false breakouts, but less often will you be able to see, or will you get to see, false reversals. So your probability of success would go up in that case if you were to side by yourself by only the reversal patterns also. So even mastering a few of those reversal patterns and even mastering the course that I have given to you on the YouTube channel and called the masterclass in price action trading, even if you were to master those reversal patterns and you were to take those reversal patterns at important resistances and supply zones or important supports or demand zones, that would also suffice in your trading journey. So that is the important message I wanted to give you in this particular video. Okay, so I've just extended a few levels here. I will delete this level now, and since we do see a crash 2 times from the previous day low, the high, day high, that is today's high, I will mark the PDH as a strong or a supply zone, but the PDL will be a strong demand zone. So it's a good sign that we have seen the price has bounced from the level of around 16,142, which is a good sign. So we do seem to have some intraday support at that level. Let's go to the higher time frame. Let's see what sort of price action we can get to see on a higher time frame. There is one bit of a level, a small level here that might be an essential level for us to mark. I'm not sure how important that level is going to be, but if you want, you can keep that level ready. The level is around 16,250. So you might want to keep that level ready because of the fact that this level has somehow once broken as a resistance, held as a support, and so the level of 16,250 might be an important level, or at least you might be able to see or get to see a reaction at that level. So that's why the level of 16,250 might be an important level in Nifty. Now let's go to Bank Nifty and see what levels we have in Bank Nifty today. Now this is Bank Nifty. Okay, in Bank Nifty again, the same story here. Bank Nifty opens with a strong red candle, but Bank Nifty did not go beyond S3, right? So it broke S2 convincingly, but it did not break S3. In fact, it did not even reach S3. Price here did take support at S3 from where it bounced, so very close to S3. So S3 was a strong support in Bank Nifty. And then again, you could see how price actually kept going up once it hit the S3 level, and then it took out the day high here. So you could see this is the day high. Always mark the day high whenever you see a strong red candle. So the day high is going to be a strong resistance. Why? Because a lot of sellers are sitting at this position. Ask yourself, where are the sellers, where are the buyers? Okay, so this is where the sellers are sitting and they are strongly sitting there. So once the price enters their territory, they are going to fight it to push it down again, and if they are not able to push it down, then they will start to close all their positions here, leading to a big short covering rally. And so you could see how price here reacted around the PDL, and then this particular candle, again the 12:40 PM candle, it broke into the previous day's range, and you could see how, like Nifty, it took resistance before it hit the previous the central pivot, sorry, and then it also took out the low of this particular green candle. And you could see how after this candle happened, it gave a bit of volatility around that area, then it kept falling after that. and then around S2 pivot it again took support and it went up. So a lot of volatility towards the end of the day, and the reason being that a lot of traders got trapped in that particular zone, both in Nifty and Bank Nifty. So let's quickly mark off levels in Bank Nifty. Since I've explained all the price action in Nifty, it's kind of the same in Bank Nifty. We will delete all these levels, but we will mark one important level, which is the PDL, that is previous day low, which is today's low, as an important demand zone. And the supply zone, again the PDH will be a supply zone. Price has fallen from there. Also, let's go to the 15-minute time frame. What do we get to see here? We get to see a very strong pin bar right here. It's a long tail pin bar, 9:30 a.m. It was a good candle, good green candle, after which we saw back-to-back green candles, right? So the base of this candle is going to be an important demand zone. So that's why we've marked the PDL, the previous day low, that is today's low. And we can see that again tomorrow in Nifty and Bank Nifty we see a tight CPR. Of course, the CPR values may change later in the evening, so I'll update these levels on Twitter and then you can take them down from here. And I've just extended the gap as well as the virgin CPR, and no gap is left today. And okay, these CPRs I have not marked the CPR in Nifty and Bank Nifty because they are very extremely narrow CPRs, and such narrow CPRs really don't hold as strong virgin CPRs, so you can just simply ignore them, right? Doesn't matter, these CPRs. And you could see that once this level was crossed, it gave price support intraday twice, the level of around 34,095. So we could keep that level on the chart for tomorrow's trading session, but if tomorrow that level is not touched, then we will not keep that level on the chart after that. So we'll delete that level. Okay, so the level of around 34,095, it might be an important reaction level for tomorrow. So going forward, just keep an eye on that level for tomorrow's trading session. Okay, I think these are the important levels that need to be marked. All other levels historically have been marked, and as price has come down and come very close to the 33,900 mark, we should be marking levels below it also. So we'll keep marking those levels progressively as price keeps falling further. Okay, so it is important to for you to keep marking those levels, looking at historical price action even before the market opens. So important demand zones, supply zones, these are very important levels. You have seen how these levels hold or break as price approaches them, and you've seen how price respects those levels that we have marked. So the market's own levels which we have identified and marked. And so if you learn to mark your own levels, then you will be very much more comfortable in your trading career. Alright guys, so I hope you've liked this video and you've liked the explanation of the price action. If you've liked it, please leave comments in the comment section below. Also hit the like button and subscribe to the channel and hit the bell icon so you're notified each time I post a new video. Please guys, share my YouTube channel with your friends and family. I don't get exactly the amount of views that the channel really deserves, because I feel that I am sharing very important information in these channels daily, and I try my best to keep explaining to you what the day's price action really was like. And so I would really like to get more and more views, so more and more of you can get educated through these videos. And I really want to make this channel a go-to channel for intraday trading. And most of these things that I teach, since I'm an indices trader, I only teach on indices, but you can go ahead and apply these things on the stocks also. So nothing really changes, because I talk purely and corely about the price action itself, and price action never changes no matter what the instrument. So that's it for today's video. I'll catch you in the next one. Bye bye.